Hi everyone. So in this video, we're going to talk about the Philippine Stock Exchange Index, how it is, but how it is influenced also by today's GDP disclosure. And I know some of you have seen it already, what our GDP is, but I'm going to give you a breakdown on what it is as well and my reaction to it and what we could possibly expect as investors. And we'll end it also with the charts. We'll end it also breaking down today's action in the Philippine Stock Exchange Index. So if you guys are ready, comment I'm ready, comment and let's go. So for today's podcast, this is the closing of the Philippine Stock Exchange Index for the day. We've seen it close at the 6,851 level, which is still down. It closed 0.701715 percent, which gives us a value turnover, which had a value turnover of 8.53 billion. So it's down today, but it's not as massive in terms of a candle or in terms of how it dropped as compared to yesterday and compared to the day before that. So we're seeing somehow no that some bit of easing in terms of how the selling pressure has been. And as you can see also today, main index is down, all shares is down, financials is down, industrial index is down, services is down, mining and oil is down, but property and holding companies are up already, which we're showing already, or at least we're seeing more indices since the large drop, or at least the all red day 2 days ago start to turn green. As usual, nothing much has changed in terms of local and foreign buying and selling. 79% of all of the trades that we had today were local. Value turnovers 8.5 billion, which is lower than what we've been receiving the past few weeks, but still higher as to where we were mid 2020. So locals have been prevailing still. Foreigners have been at the background, and I'll give you more data later on how foreigners have bought and sold also for the day. And by the way, no, later on we're gonna do also a breakdown on how stocks in the index have performed as well. So as what I've mentioned, this video is catered to where the Philippines is in terms of the GDP. I just want to mention this also that the Philippine stock market, or at least stock exchanges for that matter, are what you call a forward-looking market, meaning they lead the economy. The economic indicators are normally lagging because as you can see it right now, we're in January 25 or 20 and 28 2021. They just disclosed the 2020 data. So meaning before you see the numbers come out in the economy, the stock market tries to at least anticipate it. The stock market tries to have a sense on it. So meaning if they think it's too negative, way before the numbers come out, they already get out, they already sell. Or if they think things will get better or recover, way before there's any economic data to prove it, they start buying, and then you see stocks start to go up as well. So as you all know, for those who attended my technical analysis sessions, you do know that prices move when more buyers buy and prices drop when more buyers sell. Anyways, so that's why also for today, if you see it, no, the GDP the PSEI didn't really move as much, in spite of the GDP being relatively not so positive. Primarily because I think it has been factored in already. It has been already seen prior to this that the GDP won't be as good. Anyways, so to put a number to it, the Philippine GDP for 2020, we contracted by 9.5%, meaning just to make this a bit layman to a lot of people, this actually means that instead of the Philippine economy growing, which we have been doing massively over the past 2 decades or so, which we have been seeing unprecedented growth brought about by we have a young and dynamic population, brought about by the remittances, brought about by the BPO industry, brought about by for the past few years POGO, brought about by increasing tourism receipts, brought about by increased infrastructure projects. But suddenly we started to contract. Instead of us growing as an economy, we started to shrink. And we shrunk by 9.5%. Just to also temper it to everyone, the whole world got hit. I think with the exception of China, which was one of the first to get the illness, and they were the first to lock down, and they were the first to also recover. And I'm going to show you who among our peers in the ASEAN region have done much better than us. But the expectation is globally, this is something that has affected massive economies around the world. So the question is now, the question that we should look at also, and I hope that since I know the subscriber base here are critical thinkers, strategic thinkers, logical thinkers, the next thing that you have to look at is how good are we in rebounding up against our peers, up against other countries in the region. Because ultimately, the Philippine markets were lumped up against all of the countries in our region: Indonesia, Singapore, Vietnam, Thailand. The name of the game is to put the money in countries where they think recovery will be seen faster, in my opinion, because ultimately also that's when it starts to reflect on the bottom line of those companies. So they're very sombering, negative 9.5%. Now, just to give you context on our peers, so far, no, as of January 28, 2021, these are the countries that have disclosed their GDPs, at least for their Q4 GDP disclosures. Philippines, negative 8.3. This is the annual. This is our Q4 GDP. Please do note that the worst GDP that we got was the second quarter of 2020. This was when the Philippines, or at least 90% of the economy, was locked down. I think it was negative 16.5. So now we somehow are better than the second quarter. And for those who have been following my videos, I've been mentioning that the worst that we would have probably seen it already was at the second quarter, and the worst most likely is over. We've seen the blunt of it as of the data that we have right now. So we're better off than where we were, which is something good, which is something positive. But if you look at our neighbor, Singapore, negative 3.8%, they've started to rebound faster than us, and Vietnam, which is already growing. So ayun yung I think kailangan din natin tignan, no. We're we've started to get better, but we're still contracting, unlike Vietnam, which has done a much better job. Now you might be asking about the other countries. Malaysia, Indonesia. I don't know bakit Vietnam nakasulat dito. This is supposed to be Thailand. I'm sorry, guys. Malaysia, Indonesia, and Thailand, not Vietnam, are projected to be better than the Philippines also, at least for 2020. So it's a relatively sad reality that we're chasing our peers. That's why I keep telling people that you should not be discouraged by the economy, but you must frame it also that you build your own personal economy, because that's what matters, that you can thrive even if the Philippine economy is not doing so well. And if you've been watching the podcast that I've been doing to a lot of people that have guests that have been in my channel, a lot of them are very optimistic, and a lot of them have taken their destinies in their hands. So that's what I want to share to all of you. So bad economy, it does not mean that your personal economy should falter as well. It just means that in terms of investments, this may not be super attractive to other large institutional funds that are comparing us side by side. And please do note that there's still a big impact on how foreigners, institutions deploy capital to our country. So let's continue. Comment below if you're learning. Comment if this is something that's helping you. Domestic consumption in the Philippines is down. And I hope that this is not boring for all of you. I know when it comes to economic data, it's not something that people really want to watch. But I believe that this is something that's essential. I believe that this is something that will cause you to grow as an investor as well. Data like this will help you also determine where we are as a country, where you will deploy capital as an investor. And I'm not sure if you noticed this, and that's why I've been talking a lot about US stocks, because that's where I've seen companies, sectors that have been thriving in the midst of the pandemic. Guys, I just need to drink water, primarily because I've been doing, natuwa ako mag-Facebook Live, and Kumu, sa mga taga Kumu, natuwa ako mag-Facebook Live and YouTube Live and Kumu, that since I've been talking longer, I need to also rest my voice and drink a bit of water while doing this video. So I hope it's okay, and I hope you don't mind. Anyways, so domestic consumption, which for those who have been following my videos, I've been saying that one of the key things that I liked about the Philippine economy is that we are a consumption-driven economy, meaning as long as Filipinos are spending, the economy will thrive. As long as nagpapadala yung OFWs, tapos ginagastos ng mga Pilipino dito, as long as yung mga taga-BPO, upgrade ng lifestyle nila, bili ng mga coffee sa mga coffee shops, the economy will thrive, bili ng kotse, etc. However, this was one of the facets or items or sectors that got hit last year. Domestic consumption contracted by 7.9%. So again, the GDP contracted, and part of and parcel of us contracting is basically because of domestic consumption. And you have to look at it this way. Madami doon, kahit gusto nila gumastos, since naka-lockdown, hindi rin sila makagastos. Or gusto nila mag-travel, since hindi pwedeng mag-travel, wala rin silang pwedeng panggastusan. So I just wanted to point that out, that one of the big things that hit us was primarily the effects of the virus and the lockdowns to sort of contain it. This is one that's positive. Government spending increased by 10.4%, but this was something sana that could have been massively, massively increased to somehow protect the economy. That government would spend and spend and spend and spend and spend and spend to somehow bolster the economy. But another video is coming out later on 8 p.m. We have an interview with two economists, Alvin Ang and Carlo Asuncion. The problem is not about allocating the budget, kasi may budget yung government to spend eh. Hindi lang nauubos yung budget na nasa-spend. So sayang din. So kahit mag-allocate ka na mas malaking budget na pang-spend, kung hindi lang siya nagagastos, hindi siya nagagamit, then no matter how much you allocate on it, may not be as fruitful as well. But this is higher than I think. This is one of the sectors where, or at least contributors that we've seen growth, but it's not as high and it's not as compelling that whoa, parang ang taas ng government spending. It's not like that. Okay. Other negative items are imports. As you all know, we're on lockdown, and a lot of the things that we would import are machinery. Think about kung di lumilipad Cebu Pacific, di lumilipad yung PAL, ano yung import? It puts a hamper on that. And ganun din, yung mga machines for construction, because we've been on lockdown, that also got hit. Then exports as well. Exports negative 0.21.9%. So imports are negative, exports are negative. I just want to mention this also. Agriculture is negative, manufacturing is negative, construction is also negative. One of the things that wala yung isang slide. Wala, sorry. I knew I had another slide here na wala or natakpan siguro or something, but I'm sorry about that. But just to reiterate that things are not as rosy as what we wanted it to be. And I know that everyone started 2020 thinking that things will be better, but it did not turn out that way. Anyways, this is a data that they disclosed also a while ago. Quarantine restrictions cost 1.04 trillion pesos, or an average of 2.28 billion pesos a day, which is a lot, which has impacted the country by so much. And it has cost workers around 23,000 in average income for 2020. So there, my the way I look at this is there are certain sectors that are immune, especially the BPO industry, the e-commerce industry, people who can work from home and are not really dependent on being physically out. But majority, the common tao, got hit on this. To address that, this is the 2021 budget, and it's nice that they passed it earlier as compared to the previous, I think 2 years ago, where it was delayed, and that caused somehow an impact. It impacted the GDP. So 2021 budget is 4.5 trillion pesos, and this is around 21.4% of the GDP target for the year. And of that 4.5 trillion, around 1.1 trillion pesos would be allocated for infrastructure, which I think we need, and which is, I think, interesting right now, because since a lot of people are still, we're not yet, a lot of people are not still going out, lesser traffic. I think it would be easier to build, fix, construct, and create things, or push, build even further. So I think build is a good way to further push things. And I've been following a lot of the news also lately on the EDSA decongestion program and everything else in between. I think this is something that's really positive, and spending more. I hope that whatever gets allocated gets spent, because as it gets allocated and it gets spent, uh, there's a large trickle effect on not just the economy as a whole, but to regular Filipinos out there. When I said regular Filipinos out there, look at the impact of the jobs that it creates. This will create 1.7 million jobs, which is good. Now, I want to mention this. One of the reasons why we didn't really see the markets drastically go down today is what I've mentioned at the start of the video, that the economic figures, GDP, they're all lagging indicators, and this is something that we've all expected, given that already the second quarter was bad. Actually, the first quarter was even bad. We were already negative at the first quarter of the year, and that was a Taal eruption, and then we only saw the full hit of the lockdown March 2020. So, if we were negative because of the Taal eruption, how much more would we be in terms of when the full lockdown was in effect? So I'm saying that whatever negativity that you're seeing right now, it's something that's expected. And the good thing, I guess, if you're putting bright spots to it, since mababa yung base ng 2020, for sure, yung growth natin for 2021, you will see better figures in the GDP. And a lot of people have been projecting 5, 6, 7 to as high as, I think I've seen 8% GDP growth for 2021. It's not because maganda yung performance natin for the year. It's more so because sobrang pangit ng performance ng country or ng economy last year. Lower base, easier for you to be able to push up. Now, that being said, for us to go back to, please remember, 2019 was, from an economic standpoint, was our highest level. That being said, that was at our highest level. For us to go back to 2019 levels, 2019, for those who can see 2019, then bumaba tayo 2020. We're gonna go back 2021. Then for us just to go back kung nasan tayo in 2019, it will take another year just for us to go back. Instead of us being here sana 2020, we went here ng 2020, 2021, 2022. So yung dapat target natin ng 2021 or 2020, most likely we will get it sometime 2022 or 2023 pa. So it's a long recovery, and that's why if you want to position, there might be some stocks that will be really affected, and there might be some stocks also that you position today may take some time before they start to recover. I'm not saying this para mantakot, but I'm saying this so that you know and you are informed and you can make wise decisions. And yun naman yung adhikain ng channel na to. This is not, by the way, financial advice. You need to do your own research. But the whole goal of this is to give you information and to share my passion to help Filipinos invest and use the right rudiments to it, that you don't rely on hype, you don't rely on your friend on what's going on, but you do your own diligence for you to be able to win. Now, this is where the PSEI is. We've still been hovering at this range, no? And since we barely moved for the day, water break again, sorry. Since we barely moved for the day, we're still moving in a sideways pattern. We're still below the 20 and 50-day moving average. We're still consolidating with the main resistance at 7,307. Then another resistance at the 7,040 mark. Then you have your main support still at the 6,735 level. MACD and GMMA though are bearish. Then you have your main support line. You have your main uptrend from the March drop coinciding with the 100-day moving average, which are consistent and parallel to each other. And the 200-day moving average still remains as its main protection at the 6,300 level. So for today, now I just want to note this. I posted this. This is the index 2 days ago. 25 out of the 30 index stocks were down. Then yesterday, naging 20 out of the 30 index stocks were down. Then today, 15 na lang. suddenly we're seeing at least no the selling start to ease already, and we're seeing uh the relatively it's good when you start to see lesser red stocks, meaning that at this current levels you're seeing people start to already buy. So from that perspective, it gives you already at what level are people thinking that this is already a good buy for them. And please do note that if there's one thing that I've seen, that I know in the stock market, it's always about sentiment. People buy, sometimes much, of course, based also on fundamentals and the company, but most of the time for the short term, a lot of people buy based on sentiment. And that's why those who base it on either fundamentals or technicals are the ones who will win. And more so, and more than that, it's those who know fundamentals and technicals and follow their plan and not listen to the crowd. The more you listen to the crowd, the more you listen to your friend, the more you listen to the noise, the more you will lose. Now this is the most traded stocks for the day. We've had around 8 billion, and true enough, similar to yesterday, um, you have BSC at 1.6 billion in value turnover. You have APL at 1 billion. Then you have PHA at 3.66 billion, at 3.366 million. So if you add that, that's around 3 million already. Close to maybe 40 plus percent of the traded volume today are still in these three stocks that are driven by local investors, majority retailers, and pretty much not a lot of these stocks are as fundamentally big as the normal ones that institutions normally buy. But this is the price action for the day, and this shows you also where the Philippine market is in a general snapshot and how it has been progressing from a daily basis. Foreign selling today is at 1.26 billion pesos. Foreigners have continued to sell, but as what I've been mentioning, foreigners right now still are a smaller portion of the transactions. Locals have been dominating it, but if we want to really see the markets push higher, it should be a combination of local institutions willing to buy high, meaning they're perceiving that things are already better, that companies are seeing are deeply undervalued already and could possibly grow. And in the same way, foreigners are seeing it that way as well. Just to put this to a close, please do not buy, sell, hold, or avoid the stock just because it's discussed in YouTube. Please take the time to study because it's your money, it's your responsibility. This is for information purposes. This is not financial advice. Please contact your financial advisor and please study before making the right decisions. Now, before I put this to a close, put it in the comment section if you guys have any questions. For those who want to learn more about how I analyze the markets, we have a small training this weekend, Saturday and Sunday, in the BGC area. Link is in the description below for those who want to join. And for those who want to meet me, see me face to face, and those who want to learn the way on how I would analyze stocks. So all of this jargons about technical analysis, support resistance, candlesticks, trend lines, MACD, ADX, everything else in between. That's what we're going to discuss this Saturday. So for those who want to join us, I'm looking forward to see you. You can see all of the details below. And for those who have been sending questions about US stocks, we have a website down below. It's called eToro. You can click that. It will allow you to buy US stocks for 50 US dollars only. There. So if you guys have questions, put it in the comment section. If you like this video, this helped you, I appreciate it if you press the thumbs up button. And if you guys want to DM me two ways, Instagram, I try to reply to 20 to 25 messages a day, or in Patreon, where we have a very, very small community there. And I try to, and I reply to everyone, not try, kasi konti lang I get to reply to everyone there. So that's it for now. Expect more videos. An hour after this, I'll probably talk about maybe stocks by request. Put in your stocks that you guys want me to talk about, or I wanna give you my thoughts about the GME stock. Then 8 p.m. or 9 p.m. we have also top economists in the Philippines sharing their ideas to us. So there, I hope you guys got a lot from this, and I hope that this is something that's insightful for all of you. This is Marvin Gurmo. I hope this video helps you Trade well, trade strong, trade smart. Comment, I'll go, I'll go, I'll go, I'll go, I'll go if you stayed up until the end, or if at least you want to support this channel. I need to rest my voice now. So thanks, guys.